The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from optionpit.com, Mike Tusaw from knowyouroptionsinc.com, and John Grigas from Options Express.
Welcome back to the Option Block, and I hope all of our listeners out there had a fun and exciting weekend. I'm sure if you were watching the tumult in Egypt and the resulting movements in the markets on Friday and over the weekend, then you probably had you were glued to your computers and to your TV screens. I am your host, Mark Longo, your host for this exciting romp through the world of options, and I am joined, as usual, by my colorful co-hosts, co-panelists on this adventure, starting off with good old Rob Kurzakowski from Options Express. Rob, welcome back to the show.
Nice to be back on, Mark.
And, of course, we also are joined by Uncle Mike Tusaw from the mountains himself, and also of Know Your Options Inc. fame. Uncle Mike, how are you doing today?
You know, I'm doing really well. It's ironic that I'm an uncle. None of my siblings have any kids, but I am an uncle a lot on my wife's side, so I guess I'm an uncle by marriage.
We're just paving the way for you, give you some practice ahead of time.
There we go.
Both in the uncle status and in the mountain man status.
Oh yeah.
Which you will need for the coming zombie apocalypse, I'm sure.
With what's going on in Egypt, being a mountain man doesn't seem so bad these days.
Yes, indeed. And we are also joined, as usual, by the greasy meatball himself, Mark Sebastian. Mark, how are you doing today?
I couldn't be doing better. I'm just fresh off of enjoying some Skyline chili in beautiful Cincinnati, Ohio, and followed it up with a big scoop of Grater's ice cream. And then they said, it's only $1 more if you get a second scoop. And I said, oh, okay, I'll have the second scoop. So I'm feeling fine. I'm feeling like 2 scoops of ice cream in a waffle cone. That's how good I feel.
What's going on in Cincinnati?
My brother lives there, so I was out visiting my brother. He works for Procter & Gamble out there, and then I was actually meeting up with a friend that works for a company headquartered in Lexington, having a little discussion with them as well. So it was a lot of fun.
Get any good P&G tips?
I did. I have they're working on some really cool things. So I'm not at liberty to discuss any of that, though. So
that's why you loaded up on all those downside puts in P&G today. Now I understand. It was pretty sizable.
Well, they're coming out with the 12-blade Gillette. It's going to be called the Gillette Octuplet, or the Gillette Septup, whatever the 12-tuplet word would be. Is what they're coming out with for a razor. It's actually going to be 2 Gillette. It's going to be a Gillette sensor and 2 Fusions lined up next to each other. So each of the blades will just kind of massage the hair until it's gone.
They save you a lot of time. It just rips your face apart right from the beginning, so you don't have to worry about getting those little abrasions over time. With the 12 blades, they just tear you up, and then you're good to go.
It's a gentle massage of a blade. It's more like going to it's a spa for your face. That's what that is.
And then you buy the P&G face repairer kits, and then you're all set. You're good to go, and they're happy, and they're selling you more stuff.
Well, yeah. I mean, I'm already wearing Pampers, so I got to keep everything. I want to keep everything. So.
All right. And with that very disturbing visual, we will roll right into the trading block.
The trading block.
and welcome to the Trading Block. This is the section of the show where we discuss what's lighting up our tape and catching our eye in the markets today. And, of course, everyone is talking about Egypt these days. It's Egypt this and Egypt that. And there's a lot of concern on Friday and going into the weekend that the unrest in Egypt was going to shut down the Suez Canal. And so we saw a lot of resulting influx into crude and a huge run-up in crude. And they also saw the market selling off pretty, I wouldn't say heavily, but somewhat aggressively on Friday. And we also have talked quite a bit, including our most recent show, about how it was looking pretty good to get into some downside in the SPX right now and get your hedges on in VIX. And no sooner did that show come out than the VIX took a nice pop in the VIX cash, about 3 points.
Mm-hmm.
And so you might have missed your opportunity if you waited until Friday morning to get in. So that's some of the main issues we're watching. What are you guys spending your day watching today?
Oh, Egypt. Like you said, I think that it's going to be interesting. There's still a long way to go with what's going to go on with Egypt. What's concerning me about it is that stuff's not just happening in Cairo. Stuff's happening all over the country in Egypt. It's not like just one major coup or one thing going on in the capital city. There's demonstrations and there's stuff going on all throughout the country. So there's still a lot of uncertainty with what's happening in Egypt. Now, as a world citizen, we hope for the best as to what's going on there, but we're not out of the woods in Egypt. There's still a lot of things need to happen in Egypt.
Well, we got Tunisia melting down. We've got Egypt melting down. I think a lot of people who were looking at the downside in the SPX and maybe some of the reduction in premium in the VIX futures, we're seeing a bit of a discounting of uncertainty, and we're certainly not seeing that on the global political stage, that's for sure. If anything, there's an increase in uncertainty around the world as one by one, these countries are beginning to erupt.
I think that the big concern is that going eastward into Saudi Arabia and some of the other significant oil-producing countries, more than anything. Tunisia and Egypt, on the grand scheme of things, they're not huge oil producers. I think Egypt produces about 600,000 barrels a day, so that's like with Texas. So yeah, there's not a whole lot of production there, but if you get some of this political unrest starting to go creep eastward into like Saudi Arabia, then we're heading into a serious rough patch.
Let's hit the commodities then, since we're talking about them. Where did crude close on the day, as well as our favorites GLD and SLV?
I don't know what the official pit settlement was, but crude, we were just around 92 and a quarter at that time, and we actually hit in the Brent crude over on the IPE, we actually hit $100 earlier today. This is the first time they've hit the $100 mark in over 2 years. So that's pretty significant. And I think that Brent crude is actually dragging WTI up rather than WTI kind of sandbagging the Brent crude contract. And actually, we finished down on the day in gold, which is kind of surprising. I think that the bull run is at least taken a very extended pause in the precious metals. It just doesn't seem like that buying pressure is there. Long-term investment demand, we still see it. We haven't had GLD. They haven't had a major destocking or anything like that. So I think a lot of your short-term traders and kind of long-only funds have kind of diverted some of those funds over to oil and some of the energies. And you see that happen a lot. It seems like since that bull run in commodities ended where we had the crazy prices in oil in 2007, we've kind of seen some kind of wishy-washy trading where sometimes some of the bigger funds, they'll move money into precious metals and they'll kind of run up precious metals for a while, and then they'll get interested in crude and kind of shift over to crude. And I think right now they're focused on energies.
I know what did you guys think then of? Well, first off, I probably should give our listeners a rundown. We're recording right after the close on Monday here, and the market's just closed at the Dow up 68 points to 11,891. S&P up about 10 points, 1286. NASDAQ closed at about 2,700 even, up 13 points, and the VIX cash giving up a little bit of its gains on Friday, closing at 1951. You guys surprised that we closed up around the board, considering what's going on around the world these days?
Well, I think there's a few things to look at here. We had a big update. There's been such an influx of cash coming into the market, and people that need to get capitalized. We were looking, and stats are going to come out that January was going to end up being the biggest inflow of cash into funds since well before '08. So that's something to think about, is that cash has to go somewhere. I'm looking at this VIX, and it says, we dropped about a half a point. If you kind of take into that weekend effect, that's more like a 1.25, about a point and a quarter drop. But it's still not really indicative of how much we kind of rallied on Friday. I mean, we saw from below 16 all the way up over 20 range on Friday, and here we gain about half of the points back that we lost on Friday, but we only lose about half a tick, 1 point in volatility. And if you adjust for a strike-to-strike basis, it's even less than that. Then I'm looking at the VIX futures, and March is higher. We're in a weird spot because February futures are below VIX cash. March futures are higher than VIX cash. All right? Now, when I see that trade, do you know what I want to do? I want to buy the Fed future and sell the March. But that said, this is just it's a really screwy volatility situation. It's kind of like we've got two competing sides. We've got this influx of cash that wants to run the market up, and then we've got this kind of fear and trepidation that wants to send the market kind of south. I would not be shocked if we give away everything we made today back tomorrow, and maybe a little more. I just don't like the way the volatility index is kind of lined up against the way we rallied today. If we had ended up flat, if we had sold off from where we are here to flat on the day, the VIX would be up significantly. So that right there tells me that they're not buying this completely. This is a fraudulent down day in volatility.
Quite a change from a week ago when people were not pricing much, if any, premium into those VIX futures and into the S&P downside.
And what were you and I saying? Hey, this is pretty cheap to buy. Hey, you know what? This is pretty cheap to buy.
I kind of almost didn't even reiterate it last week because we've been saying it for so friggin' long that it seemed almost pointless to hit that point home again. That hey, maybe these things are underdone a little bit, and maybe the complacency is a bit overstated. And it looks like now, yeah, you're right. There has been this massive influx of cash coming in that seems to have overwhelmed anything else, including what I may consider to be a little bit more good sense on the bearish side of the market right now. But at a certain point, that fire hose has to abate a bit, and we have to see some of the other sentiment maybe finally taking hold. Of course, this is probably the longest time I can remember where I've been, not just myself, but everyone I talk to who's active in some way, shape, or form in the options market as a professional has been bearish. And you're probably talking well over a year and a half now, where just about everyone I talk to has leaned heavily bearish, and yet the market has ignored them repeatedly. So I wouldn't bet heavily on that coming to pass right now.
Yeah, well, Mark, the thing you have to think about is that cash doesn't really know news, okay? So it just knows returns. And you and I sit here, we can watch CNBC all day, where their job is to make something out of nothing. Or we can read CNBC.com or Fox News or the Drudge Report, where their job is to make something out of nothing. I mean, think about this. 25 years ago, would we be even paying attention to this in the markets? I mean, think about that. How badly did the markets react when, the Iran hostage crisis went down? I think, as I recall, it barely blinked.
Did you just say you get your trading advice and your news from the Drudge Report?
I get nothing from the Drudge Report. That's my point. And the key is that all of these news organizations are out there trying to corrupt you. All right, they're trying to get you to want to keep watching the news. So how do they keep you watching the news? Well, let me tell you. If my news report every day was, well, nothing's happening. It's a good fine day to be an American. You know how often you'd watch the news? Never. Okay? So we get this kind of crashing of constant kind of, apocalypse from what you see and read on the news because, hey, you know what? It's their job and they're good at it. Okay? They Olbermann you up. Okay? They give you that that extreme discussion. So the guys that do well right now are the guys that are, in my opinion, the guys I've seen that have made money do not have a TV on when they're trading. They barely watch the news. All right? Now, they want to know economic reports. They want to know what could drive the market, but they're not watching the news, and they're certainly not watching commentators. I think that the number one way in 2011 we can become better traders is by turning off the television.
Well, if you can usually separate the men from the boys right there by the ones who are watching CNBC on a regular basis and those who learned a long time ago to turn that horrible nonsense off.
Yeah.
Or at least maybe you put it on a couple times when you want to watch some sort of economic number, but you can usually get that information much more efficiently online anyway these days. So, Sebastian, reiterate for our listeners then, you're saying you get your trading advice from both Keith Olbermann and the Drudge Reports. You trade on both sides of the aisle. I call
it the Keith Drudge Report. So it's me and my sportscasters turned political ideologues and my internet news gatherers turned political ideologues. That's my general rule. That's how I trade.
So you put away your trading coin? Heads long, tails short? I thought that's what you told me.
Yeah, I did. Well, I actually have a trading salmon, okay? And what it is my wife hits me with a salmon, and if none of the eyes pop off when she whaps me in the head, then I buy. If the eyes pop off when she whaps me over the head with the salmon, then I sell. So
wow.
Yeah,
that's advanced trading there.
I got a little worried when you started busting out the salmon and where that was going to end up.
Yeah, no.
I didn't need to hit the.
There's no spawning
the beeper button.
I was looking to spawn some good trading.
All right, and with that quality pun, which you have come to expect from us here on the Option Block.
That's what we're really about.
That's what sets us apart, from any other shows you might see. Not just the quality level of the production and of the insight, but also just the master verbiage on the part of the panelists.
Oh yeah, I mean, name another podcast where you can get the salmon method for. Although I would bet you that salmon method would be more effective than most analysts.
I agree. I think maybe I saw a report recently actually talking about speaking of analysts and their efficacy, about gauging the results of the earnings estimates from analysts versus pretty much not amateurs, but bloggers on the Apple earnings, and the top 10 or 20 spots in terms of percentage of error were all bloggers and quote-unquote amateurs. The pros were nowhere close. That just kind of reiterates what we've said a lot about analysts here, and I thought it was interesting that there's actually some hard data on that recently to back that up.
Yeah, did I ever tell you this? I sit down with one of my buddies and his girlfriend, and somebody brought up analysts, and I said, analysts, what a waste of time, what a waste of money. That's a job that has long outlived its purpose. And then I said, hey, by the way, what do you do? And she said, I'm an analyst.
You knew that one was coming.
I did. Everybody did, and it's just like me. And but it worked out fine. She was. I said, well, except for what you do, and then everything was fine.
And with that, we're going to close out the old trading block and move right into the odd block.
The odd block.
And welcome to the Odd Block. This is the section of the show where we discuss what's lighting up our tape from a unusual activity perspective. We're going to start off, actually today looks like mostly some small names. Probably the biggest one we have here is Mattel. We'll start off with Mattel. They closed at $23.68, up 17 cents. Mattel's coming out with their earnings after the close on Wednesday, so not a surprise. We're seeing a little bit of a blip in their activity. They average about 5,000 contracts a day. Today they did over 14,000. The bulk of that, 10,000 contracts, was on the Feb 24 straddle. We saw a bunch of multi-exchange sweeps coming in to pick up 5,000 of that straddle for $1.50. So this guy's looking for a 7% pop to the upside or a 5.5% pop to the downside coming out of earnings. Not surprising with this guy scooping up so much vol. The vol has spiked to about 38%. That's the highest these February options have ever seen since they've been listed. Looks like just looking at this guy's track record here, or look at what he's betting on. If you look back at their earnings reports, Mattel has moved. It was unchanged after their last earning and the last earnings report, and before that in Q2 and Q3 earnings, they moved 9.5% and 6.5% respectively after their earnings announcement. So this guy is betting that more for the former rather than the latter. But he picked. That's a relatively. I mean, I guess you have close to 3 weeks left to go, so you still have some time, and you do have earnings. That still is a relatively pricey straddle for what we're looking at here. What do you guys? Anyone trading Mattel at all, or keeping an eye on that?
Not recently, but I used to only have a bunch of He-Man guys. I used to love that.
All right. Well, I knew you were going to throw up some card thing or some story thing.
I'm with you on that one, Mark. I still have He-Man was my hero growing up.
Although I think anybody would admit that movie was terrible. Dolph Lundgren, awesome. That movie, terrible. I love Courtney Cox. I love Dolph Lundgren. But I'm sorry, it was just a really, really bad movie.
All right, Sebastian, I have to tell you this, and since you brought up He-Man, you have a 1-year-old. My son just turned 2, and one of my greatest joys of the father so far is my 2-year-old son recently discovered He-Man. He saw some old DVDs I had bought when he was born, on the hope that since little kids watch cartoons, maybe I'll watch something that actually I knew from the kids. And he never got into it, and then recently he discovered it and pulled it off the shelf and said, "Daddy's movies?" And so he put it in. Oh, nice. And now he runs around the house saying, He-Man. And he desperately wants, exactly. And he says, he tries to say Grayskull, he can't really say it yet. And he says he wants a Battle Cat. He's saying Battle Cat? Battle Cat coming? So, he's super into He-Man all of a sudden. And he loves Teela. I guess he likes her revealing outfit. Something about her just draws him to it. I don't know what it is, but it's really funny. He's a He-Man addict all of a sudden. So, yeah, I figured you have something to look forward to in about a year or so.
That's awesome.
Next up, when he's a little bit older, it'll be Transformers, but for now, it's He-Man.
Oh, nice.
So yeah, that's Mattel's straddle going up 5,000 times for $1.50. We'll see if this guy is correct or not on Wednesday. And then moving on to a small name, EXM. This is Excel Maritime Carriers, not to be confused with the spreadsheet. They closed at $4.53, down 14 cents. This is the name that does under 1,000 contracts a day, 800 contracts a day normally. They did over 5,000 today. The bulk of these were in March puts, where people coming in and gobble these puts up. And this company actually, they provide transportation services for dry bulk cargo. So there you go. If that means anything to you, and you're in the shipping sector. But the bears are looking for this stock to trend downward. They picked up over 3,000 of the March 4 puts. This is for 15 cents. This is the strike that had an open interest of just 200 contracts. So this is all new paper coming in. These guys are obviously thinking this stock, which is already relatively cheap, is going to have some hard roads ahead of it. The stock's down about 30% already since last November, and these guys are betting that this thing's going to drop another 17%, just based off these trades. The stock did trade around $3 a couple of years ago, but since then it's traded higher. Not surprisingly, on this sizable put buying activity, the vol is up 15.5% on this one. So yeah, a lot of these guys are serious bulls if they're thinking this stock's going to plunge down even further. Maybe they're thinking the salad days for dry bulk cargo are over, apparently.
Yeah, this is something to where if you're looking at it, this is another area where options make a lot of sense. If you're still uber bearish on something like this, a stock that's a lower price, you're not going to be able to short it. So this is an area with which you can use options to exercise your bearish sentiment on it and have a limited risk in doing so.
Yeah, there you go. This is kind of like the flip side of that trade we saw last week where I forgot the name of it, where that trader came in and sold about 30,000 of those puts. This guy is just, taking the other side of that coin, using it to put a nice, cheap, limited risk short position on in this name. Obviously thinks times are rough for Excel. And then moving on to another small name, Commvault Systems.
Commvault.
LT. Oh yeah, you know this one, huh?
One of my favorites.
This is your baby. You trade in and out of this all day?
Oh, yeah, that's what I'm known for, is my Commvault trading.
I know. That's why we brought you on the show. They said, you got to talk to this guy. He trades Commvault like a wizard, like no one else does, because no one else trades it.
Mark Sebastian, Commvault trader. You know, it says Option Pit Director of Education. It says Commvault Expert.
Ask me anything about Commvault.
Yep, exactly.
All right. Commvault, CVLT, they closed at $30.89, up about $1. This is a name that does about 600 contracts a day. So, Sebastian, if you were trading this one, you got some nice liquidity to play with. Today they did over 6,000, and we saw a lot of players coming in to call options today. And if you're curious what they do, this is a data and information management software company. And they're seeing, looks like a lot of bulls are coming to play. They got earnings coming out actually before the open tomorrow. So these guys are taking their shot before the open. And, it looks like about 2,200 of the Feb 30s went up today for about $1.51 a piece. That's on an open interest of 800 or so. So these primarily all opening new paper. These guys are expecting another about 3% pop on this stock for these calls to break even. And then last time this stock traded that high was back in December. We also saw some even more substantially bullish players pick up about 350 or so of the Feb 32s for 92 cents. So not surprisingly, the vol here is up about 5.5% as well to about 51%. This is a name that did 6,000 contracts today, and it had a total open interest going into today of 5,982 contracts. So they doubled their open interest today in trading. So a lot of bulls thinking Commvault, and maybe Sebastian, that was you picking up that 2,000 contracts to the upside there.
Oh yeah, no, yeah, that was entirely me. Yeah, sometimes getting long the options is the better way to get long than the stock itself, and this could just be one of those cases. It's not a real well-known name, and like we said in the past, sometimes the options have better liquidity than the stock.
And I was going to throw in some bigger names today because we saw some news coming out of Intel and AMD that they're having some issues. Intel billion-dollar chip mistake, and AMD rallying because of it. But we didn't really see much in the way of super exciting paper going up, much like you'd expect maybe back in the old days when these names were actually moving markets and doing a lot. Intel's off about a quarter today. AMD's up about 30-odd cents. Might be an interesting story there in AMD. A lot of people seem to be, debating whether that 7.5 strike, if that's the, that seems to be where their point of contention is. Everyone's either hitting those puts or going long on that strike because I think the AMD is that's where the inflection is. So that'll be interesting to see. But other than that, no really exciting paper in either of those two. So nothing to report. So yeah, we're going to close out the old odd block with CVLT, otherwise known as Sebastian's favorite, and we're going to move right into the old Express/spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome to the old Express/spread block. This is the section of the show where good old Rob Kurzakowski and the boys over at Options Express peel back the curtain and let us see what's really going on behind the scenes at Options Express. It's not all just sipping lattes in the break room. They actually do some interesting stuff over there from time to time when Rob can pull himself away from the triple espressos and hit the old trading desk. So, Rob, what's going on today in Options Express land?
Well, like you mentioned earlier, not a lot going on with Intel. It's kind of become, you mentioned earlier, the new Microsoft, the slow-moving blue-chip tech company. But because of all the chaos in Egypt, we had quite a few people trading some of the crude oil ETFs, and one thing when you look at the crude oil ETFs and you actually compare it to the continuation chart of the actual crude oil contract, is you start seeing the contango and some of those risks that you see with the VXX versus the VIX, where ETFs certainly have their place when it comes to commodities and ETFs like GLD and SLV, where they're actually buying the physical metal. They're great investment tools. But the funds kind of get often punished by that first month, the second month. Usually the first two rolls there have quite a bit of deviation. And if you line up USL, which is the 12-month oil ETF, that performs probably better than any of the other ETFs because it's designed to deal with that contango a little bit better because it's buying the 12-month basket rather than looking at trading that front month. And the more leverage you get, the more the fund tends to underperform or overperform. Or relative to how it's supposed to, like UCO. Crude oil itself has taken out these highs from April and May of last year, and it's trading well above them. USL is trading above those same highs, but if you look at USO, UCO, not quite there. This is one situation where you may actually be better off trading the future rather than the ETF, especially if you have sufficient capitalization. If not, futures option spreads, we've seen quite a bit of volume the last few days, and the spreads have gotten quite a bit narrower than they have been in recent years. So we're seeing a lot of paper coming into some of those leverage ETFs. So we're trying to educate our clients a little bit more about the futures products, and you don't have to trade the big crude. There's a mini crude, and it is pretty active.
It is amazing with all the interest we have in ETFs these days and all the interest in these commodity ETFs especially, and all the interest we have in oil, that there's yet to be really a groundbreaking, runaway success in the ETF market for oil. There's a lot of detractors on USO, like you just mentioned.
Oh, USO is terrible.
It's terrible. We think we talked about it on the show a number of times before. I think Tussauds dumped all over it about how it's a terrible, terrible proxy for the oil market. And, so your average intermediate to high-end retail guy is kind of left with a little bit of a Faustian choice. He goes for the big future or he goes for these crappy ETFs. Some of them are more, like you mentioned, they're starting to migrate more into the mini crude. I think the CME can do a lot more to really put the word out there about that contract and about what you can do on it. I haven't really watched the options on the mini crude. Are they fairly active, Rob?
Actually, we don't offer. There are no options on the mini crude. That's one of the unfortunate things about some of these.
That would explain why I haven't seen much activity in them. I know they've been talking about adding them. I thought they had got them up already.
It's none of the mini products other than the mini indices. You really have your options are really limited. No pun intended. In the mini, like crude oil, the mini metals.
The many metals. You had to bring them up, didn't you? This midget kiss guy in my head right now, and it's terrifying. I want it out of there, Rob.
The mini metals are back.
Yeah, we're seeing that with some of the other ETFs as well, not just commodity ETFs, but with the VIX and some of the problems. Actually, the VIX contango looks a lot like the crude oil contango from 2 years ago, where that first and second month just had the huge gap, and there's a kind of a moderate gap, and then it just kind of flattens out. And so there's the XVIX is kind of like a medium term. They trade the medium term futures, so they don't quite get killed like the VX stacks and some of the other front month.
VXX is terrible. Stay away from that.
That's the reason why it's hard to borrow for the short sellers.
Yeah, no kidding. Yeah, there's a good reason for that.
So the official Options Express line then is for, people call you up. You recommend that they play, at least for oil, in the big future and on the futures options then, and stay away from VXX.
Yeah, I mean, if the options outright are a little bit rich for you, the spreads are actually pretty fair, and because there's so much vol out there, you can get like a bull call or a bear put spread relatively cheap. So it's not like you're going to get punished if you're doing the spreads. It is pricey if you're doing, near the money or in the money outright spread or outright trades in the oil futures options. As far as some of the other stuff we have going on. I co-write the Espresso, which is our morning newsletter. We write that every day, both Mike Strumsky and myself again. And we plan on having a once a month, or we haven't actually figured out how frequent the webinar is going to be, but it's going to be like an hour-long webinar starting in late February, and we're going to keep you posted on the dates for that, just because we kind of want to give, instead of giving one traders one market, just kind of give you 7 or 8 markets all in one shot.
Yeah, that's right. I forget we run the Espresso on our site every day, and I think when we set it up, we just credited it under Mike, but I forgot that you're the other author on that newsletter. We run that every day. We get a lot of good feedback on that. So yeah, it's definitely an interesting letter. And actually,
one thing, Rob, I have a question for you on this. At Options Express, with like the E-micros for the futures contracts on the currencies, is that pretty popular at Options Express, would you say?
The popularity has really ramped up. We don't currently offer Forex at this time. Some of the futures contracts have gotten a bit rich for some traders. Not only have the requirements increased significantly, but the day-to-day moves of the currencies are not what they used to be. When I remember when I first started trading, the Canadian dollar moved 15 ticks, and it was a big day. Now these currencies move 100 ticks, and not a lot of traders can stomach that risk. So the micro and the mini products have certainly taken off.
Yeah, because that would make me think if the micro products are doing that well on the currency side of it, if I'm the Merc or the Board of Trade or whoever, I would think that a micro product for oil or for the energies would just be a no-brainer from the standpoint that with all the success that UNG and USO have had, and by success, I mean just like popularity with all the people that are trading it, that micro oil or micro natural gas would just be a huge thing for them.
Mm-hmm. And you don't run into those risks that you have with where UNG and they can't go over position limits, so they have to trade all these swaps and these other derivatives. And same thing with the USO. You run into problems where it was kind of like the Goldman roll was years ago before ETFs caught on popularity. It was the one day that the Goldman got it stuck to them for a change, and where everybody kind of knew they were rolling and everybody was ready for it. You don't run into any of that. You're trading the actual commodity as opposed to buying up all this option premium because the volatility is high, and also trading these ETFs that have a lot of potential pitfalls.
All right, Rob, thanks for that peek behind the futures curtain over there at Options Express. And
they like to call it the Furtin.
It wouldn't be a segment close without a Sebastian pun. Quality or not, it wouldn't be the same. And with that, we're going to roll right into the strategy block.
The strategy block.
And welcome to the strategy block. This is the segment of the show where Mike Tusaw, good old Uncle Mike as we know him, takes a break from deep sea salmon fishing up in Alaska, where he hooks some monster salmon. And he comes down here and he puts his waders away and everything else, and he sits down, lights up his pipe, and puts on his Darestalker cap, and he decides to regale us on some interesting and particularly relevant options trading tip or strategy. So, Uncle Mike, what do you have in store for us today?
Well, we're coming down from Butterfly Mountain today. What I want to go through, this is just
that near the Good Rock Candy Mountain?
No, but it is close to the Peanut Acre Forest.
Huh.
So, yeah, I'm in Candyland now. So
Gotcha.
my son, my son's learning Candyland. He's doing actually a really good job with it. So, but anyway, I had a client. This wasn't a Know Your Options client. This was one of our self-directed clients recently, and an interesting maneuver that they did on a trade on a credit spread. Now, originally it was a credit spread going into an earnings announcement, and not able to mention the stock, but you'll be able to figure out what it is in a minute, I'm willing to bet. But with that, it was a credit spread, a bull put spread, and the client was short the 170 put, I believe it was, and long the 165 put. And so going into earnings, client got a little bit cautious and was concerned that he was just going to get wiped out on the bull put spread because it was right before earnings, and he was just concerned that things are just going to go down. But he wanted to stay in the trade and still wanted to be a part of it just to be safe. So what he did was he actually traded into a butterfly, meaning that he was short the bull put spread, and then he bought a debit spread above it. So he was short, we'll just say, the 50-45 bull put spread. And going into earnings, he bought the 55-50 bear put spread because of the fact that he was concerned that he was just going to get his clock cleaned on earnings. But if earnings were a non-announcement, his plan would be to get out of the bear put spread and then allow his bull put spread to expire worthless. Now, with what happened after earnings, the stock went way up and he was wrong. So immediately he got out of the the bear put debit spread for a loss, pretty big loss actually in relevance to the trade, and he kept the bull put spread on. And his plan is to leave the bull put spread on until expiration. So with that one, as a credit spread, he still has a chance of breaking even on the month. And the stock is pretty far out of the money right now. And in my opinion, he probably will break even on the month. But what he did with that is he found a way to insure himself against a major loss because of some various things that were coming out on the stock itself. And he was still able to stay in the trade and live to trade another day, so to speak. He managed risk, and he insured himself against a major loss based upon his indicators telling him that, you know what, I still think this is a good trade, but I don't want to have as much money on the table. So with that, once again, the trade, he was short a put spread. He was short a bull put spread, concerned that the stock was going to go down a lot based on an earnings announcement coming up. And so what he did to help his concerns is he turned it into a butterfly trade and bought a debit spread above it in the hopes, or not in the hopes, but in the concern that the stock was going to go down significantly, and he didn't want to be on the wrong side of it. Now, once again, the stock went way up, so he was wrong on the adjustment, but it's one where he lived to trade another day, and that's the important thing. And that is what we have from Butterfly Mountain today, folks.
And that's one to grow on. Judging by the strikes and the fact that we were playing around in that name itself, I'm going to have to guess that it was Netflix. You can just nod your head, and on radio we'll have no idea if that's right or wrong. I don't want to drag you into revealing any client information, but I'm just going to go ahead and guess that was Netflix because we were playing around those 160 and 170 strikes as well.
I was going to guess Conval Technologies.
That's your answer for everything, you know.
It was actually Dollar General, okay?
Oh, Dollar General.
Yeah, speaking of good old Dollar General, they're hurting pretty good. They're down 27.81 today, these guys. So they're no longer even above the 30 strike. But yeah, we had some interesting concerns going into Netflix as well, and we ended up keeping our position on. I believe one short the 160 or the 170 strike, around that same range as your client. And just looking at the historical for Netflix, it looked like it was a relatively safe position, even if things did go poorly. And turns out, obviously, they did not. They went ridiculously well. But yeah, they blew beyond even their scheduled 20-odd point range they normally move around earnings these days.
Do you want to know what was interesting though with Netflix? Was it really mattered what position you took when you put that on? Because the weeklies was not, a lot of people got in the weeklies. The trade was not there in the weeklies, but it was there in the regulars. If you had bought a calendar leading into that earnings announcement, you still made money if you did Feb March. It was only those weeklies that really got people. So one of those rare times where like that front month premium just absolutely betrayed everybody. So it was real interesting.
Yeah, you're right. I think now that I think back on it, I think we were playing in the weeklies, and as I recall, looking back on it afterwards, there actually was a better play to be had in the Feb 160s as opposed to the weeklies.
Oh, the Feb was the much better trade.
The Feb was a much better trade, which is unusual for those, for a weekly with 2 days to go. That seemed like a much better scenario. But yeah, the Feb came off like it was going out of style. Of course, it was
unbelievable.
Yeah, no one expected such a ridiculous upside move. I think they're still trading. Let me see. They're still trading 214, so this stock is just off to the races.
Yep.
But
there's no stopping it.
Of course, I did hear just on the rumor tip before we move on. I did hear that Amazon is now thinking of adding free video streaming for everyone who's their Prime subscribers. So not only do you get the free shipping, but now you also get free video streaming. And that's apparently a beta they're slowly rolling out. But if that comes into play, that might actually be the thing to finally take some of the steam out of Netflix.
Well, it wasn't. If Apple TV couldn't do it, and if we know how people think Apple can do no wrong, then I don't see how Amazon could do it.
Yeah, Amazon certainly did not get the love that Netflix did after.
No, they did not. It was really
shocking. They were up about 9 points before the earnings and down about 20 immediately after.
But I have to say this: that 170 call spread after earnings came out was a screaming buy. You could have gotten in for 250, 170, 180 call spread. After earnings they completely oversold volatility, and that 170-80 call spread was just a beauty of a trade. So you could have gotten in for about 250, and I think it's worth around $4 right now. So just remember, sometimes you can kind of get in after the play, and that can be just as good of an earnings play as the earnings play itself. So I know it's less exciting, but it can a lot of times be more profitable. So
certainly
that's something to remember.
Certainly easier to sleep at night. I know your client would probably appreciate that there, Mike.
Sleeping's a good thing.
That's why they pay guys like you. So you stay up at night for them while they sleep like babies.
Well, and this trade that he did, this wasn't one of our trades. This was just one that the client did on their own. So, but it was I thought it was pretty interesting the way with which they managed the risk on it.
Yeah, that is really interesting.
Sounds like a relatively savvy guy you have there. That's nice that they're not just putting on crazy debit spreads for as much or credit spreads for as much as they possibly can, and not just leaving them on. They're actually managing risk. Maybe that's some of your influence. You guys are getting them to maneuver a little bit better. But anyway, interesting stuff. We will speculate that the answer is Netflix. We will leave it to our listeners to determine on their own if we are. Oh, we'll leave it to our listeners to determine if we are correct or not. And someone's listening to Enya in the background there somewhere. Must be you, Sebastian. I know you love your Enya.
That's me.
Your Enya and your Crystal Light. That's you. All right.
Sorry, cell phone noise. It was my Enya. Whatever Enya is.
All right.
Trade away.
Exactly. I knew you'd know that one. All right. And with that, we'll close out the strategy block and roll right into Around the Block.
Around the Block.
Welcome to Around the Block. This is the section of the show where we discuss what's on the horizon for the next few sessions. And there's a lot of things going on. We were talking about crude earlier in the show. We're going to see some crude inventories coming up on the 2nd. So that might be interesting to see if that is, that's more of a backward looking indicator, but maybe going forward, that'll be interesting to see how that plays out with maybe the Suez. If they do shut that down with all the rioting going on in Egypt, those crude inventories will be interesting numbers to watch going forward. We also have non-farms on Friday, obviously. In terms of the earnings front, not too much that's super exciting for the next couple of sessions unless you're into they got Electronic Arts on Tuesday, and a lot of our people have been speculating and coming to our site talking about speculating in Activision and Electronic Arts. They're two video game software manufacturers, and a lot of movement going on in that sector lately. So people are positioning ahead of those earnings. I know, Sebastian, on a personal level, you must be super excited about Casio earnings on Tuesday.
Oh, yeah.
Nothing says 80s relics like a Casio keyboard and a Casio watch.
I still have my little mini Casio. that I love playing with. So
was that the music we heard just now? That was what it was. You playing away on your little Casio board.
Yeah, me. That was exactly right.
Oh, you also got Pfizer before the Open tomorrow, so that might set the tone for some of the market anyway. What else are you guys watching going forward?
We've got non-farms coming up. We've got some housing data, so I'm real interested. And, just general Egypt, I'll be real interested to see what's going on. There's a lot of info out there.
Yeah, with Egypt, that's one problem that you have with incumbents is incumbents still have the control of the military. So, we've seen this with the Ivory Coast, and I know a lot of people probably don't trade the cocoa market, but that's been a really hot market lately. And, that thing's dragged on. That situation there is dragged on for well over 2 months. So.
Shouldn't they call it the Cocoa Coast?
Are you cuckoo for Cocoa Coast?
I'm cuckoo for Ivory Coast.
This is why Rob comes on the show like once a month. He has a finite number of Sebastian puns he can take on a given week.
So that's ridiculous. So.
And Tucson, what are you guys watching with your clients over there at Know Your Options?
Just how the commodities react to this thing in Egypt. If we get it so that the Suez Canal is an area where if we're not able to get oil through, that's going to play a factor in a lot of different things. And with what's going on in Egypt, that takes precedent over anything else we're doing right now. And I know last night I had my eyes glued to the futures as they were opening last night on the Sunday night, and they opened down another 8 or 9 points in the S&P E-minis. So I was looking at them thinking, all right, well, here we go. And, obviously it didn't end up that way, but without a doubt, Egypt's playing a big role right now. And this is far from over, folks.
And Sebastian, I don't have it up here on my screens right now, so maybe you can pull it up for me. But I know we talked a lot in the past. We talked earlier in the show about the VIX futures pricing in some premium. How's that SPX downside skew looking? I'm sure it's firmed up quite a bit.
Super crazy.
Yeah.
So, it is unbelievably high.
So between the last show and now, you probably missed your golden chance to come in and put on your downside speculation or hedge in the SPX/VIX.
Correct. Yeah. We've got vol up and skew up, which means skew is way up. So that's the thing you got to remember is we're not just dealing with a situation where, it's like, we've got 100, the skew's increased on the same vol. It's actually way higher, right? Because, that at the money vol is up. So if you've got 150% of a higher vol, you've actually got an exponential increase, right? And that's really something to remember. That a lot of people forget. So that's something to think about.
People think in terms of ATM vol all the time, but when you're talking skew, you're talking, vol on other strikes. And when you're talking particularly downside where there's very little to no in, intrinsic value, it's all extrinsic value.
Right.
Then when any sort of increase in the value of those downside puts in relation to the at the money is an exponentially greater increase in vol.
Well, think about this. We've got at the money vol at about 16%. Skews at 150% of that. 2 weeks ago, we had at the money vol at 13%, skew at 135%. So do some math on how much that downside is up. It is a huge increase.
I have some math for you on how much that downside is up. I'm bringing up a portfolio that we have right now. Just to give you an idea of it, it's a portfolio full of puts, short puts on sector ETFs, a couple of the sector ETFs itself, and it's hedged with some put options where we're long some puts on SPY. And to give you an idea of it, normally right now the market is up today. S&P is up 0.77% today. This portfolio is up about 1% right now. That's one to where it shouldn't be that way. It shouldn't be up that much on the day. And the reason that I believe it's up is because of all the implied volatility that is higher on that SPY June put that we have in as a hedge.
Yeah, it's interesting. So you're saying it's going out as far as June. It's not just, front month or Feb or March or anything like that, but it's
at least in this portfolio, yeah.
It's hitting all the term structure then, which is interesting. So, if you were one of our listeners and you've been listening and you've been hesitating about pulling the trigger and, putting on your hedge in the downside, despite what we've been saying for weeks, if not months, it looks like you may have I wouldn't say you miss your opportunity. Obviously, you can still always get in, but maybe you want to wait for a more selective period to get back in on your hedge.
The idea now is that if you think vol's going up, with that Feb trading below VIX cash, the Feb VIX contract is actually, in my opinion, the better portfolio hedge than downside SPX by a long shot. So that's something to think about, folks. That's actually what I'm going to be writing about today on my blog at optionpit.com if you go and view it. So,
yeah, if you're an Options Express customer, you have ability to do futures and equities in the same account, then yeah, by all means, expand your horizons to look beyond the downside in the SPX and maybe look at some of the VIX futures instead, because you can perform the same function and you're getting a different risk premium built in depending on which month you're looking at. So it sounds like Feb might be the go-to choice going forward if these downside puts in SPX are just getting bid up out of control. And all right, I think that's an interesting topic to close it out on, some food for thought for our listeners. I want to thank all of our panelists for joining us today on the old option block. And starting with you, Uncle Mike, what's going on over at Know Your Options Inc. that you want to let our listeners know about?
Well, it's like a lot of things, actually. Once again, on February 12th, I'm going to be up in Minneapolis as a guest speaker for the Options Express event. At the noon hour, we're going to be talking about long-term investment strategies that use options. And this week for our weekly webinars for Sunday night at 8:30 Central Time, Plan the Trade, Trade the Plan. The importance of coming up with a plan on doing a trade no matter what you're doing, whether you're doing a buy and hold mutual fund strategy or you're scalping the S&P on a daily basis. And then Monday night, we're just going to do a beginning option class and just go over what is a call, what is a put, and all that fun stuff. So if you want more info on it, go to knowyouroptionsinc.com.
Don't forget all those fun custom webinars you're doing for your clients on a regular basis there, about how to do 1-by-2 ratio risk reversals in the Brazilian coffee index, I believe.
Those are actually closed off for a few more months now. We're actually we got all we can handle in that regard right now, but we're pretty.
Do you guys archive those, right? So people can come in and check out the ones you've done, especially the custom ones.
Custom ones, no. It's just one-on-one. We're actually physically talking to the person on the other side of it to where they can say, in my account, I have a 1-by-2, this, that, or the other. And then we would say, well, what you could do is this, that, or the other. Obviously, we're not able to give advice if they're not our clients, but you will end the session more educated than when you're going into the session. And if you're not, we give you the double your money back guarantee, seeing as it's free.
Well, that's a good deal. I like that. And Mr. Greasy Meatball, Mr. Mini Metals, what do you have going on at optionpit.com? I know our listeners, they can still cash in with that OI 2011 code, correct, and kind of catch up on the class?
Yeah, the second class is tonight. We're actually running a very, very, very special deal right now. Between now and Super Bowl Sunday, only now and Super Bowl Sunday, we are cutting our prices back to where they were on at the end of the year, January 2010, for our future pros course. Our pros course, there's such, I can't take any more of them, but we've got a little room in our future pros course, and we're trying to kind of spark some more discussion. So if you use the code MISSING2010, that's MISSING2010. You can revert our pricing back to where it was at the very end of 2010. So that's something to keep in mind.
Interesting. A nice throwback for a guy like you who's very into nostalgia and old things. You should throw it back to now, that'd be really interesting if you rolled it back to like the 1985 pricing of options seminars.
I mean,
I'm not sure what was available. I'm not saying your seminars, but just in general. What the going rate for a seminar was.
My seminars would have been like, look how well I colored this sheep.
How to trade He-Man versus Transformers in
how to tell Faker from He-Man.
That would have been a handy webinar to have back in the day, or maybe not a webinar, but some sort of seminar. All right, and Rob, what's going on in Options Express these days?
Oh, we continue to run our free complimentary coaching webinars from our coaching service, and they kind of go through. They're not one-on-one, but they are segmented or broken up very well, from very basic to more advanced trading strategies. Mm-hmm. Like I mentioned earlier, I think it's going to be both Mike Zaremski and myself on the initial Espresso webinar, so we can look for that in late February. We haven't actually set the concrete date. They haven't tied me down to a date just yet. And as far as what we've added to the website, we have tweaked the streaming charts just a little bit, and I think that just to make them a little bit cleaner. Some traders may not notice some of the changes that we've made to the streaming charts. They haven't been that earth shattering, but some of the drawing tools that we added the VWAP study, the volume weighted average price, which is something new, and the rectangle drawing. Sometimes you don't have those perfect support and resistance levels, so you have to deal with the kind of more choppy range bound areas on the chart. It makes it a little bit additionally easier to look at, and that's all we have going on right at this moment.
Rob, as the dedicated Extend product guy on the show, I talked to Tim about this a little bit last show, but we were playing around with Extend the other day, and we were playing with some stuff. I noticed that there's in the balances section, there is you can see your options requirements, but you can't go into detail the way you can on the website to see exactly what is causing each of those requirements. So I'm curious if in the upcoming betas, are they going to add that functionality to Extend anytime soon?
I know it is on the dev track. I don't know where the priority is at this point. With it, we'd certainly like to add that feature. We have quite a few portfolio margin accounts, so I don't know how that's going to, if it's a feature that we can, from a technological standpoint, it's not, or a programming standpoint, it's, you have to differentiate between accounts, because you're going to have some Reg T accounts and you're going to have some portfolio margin accounts, and some of them some of the Reg T accounts are cash accounts, or and like retirement, like IRAs, and some of them are going to be margin accounts. So they have to be. It does create some hurdles for the guys in the dark section over there that are just pumping themselves full of caffeine coating. Margin
is a voodoo area, to say the least. I kind of figured it was I assumed it was more of a margin calculation issue than anything else than a programming issue. But interesting one to have nonetheless, so our listeners don't have to go back and forth between Extend and the website when they want to see, for example, what positions they want to add to, or what positions they have to close out in order to put something else on. But anyway, that's going to do it for this show. Of course, if you want to hear more about what we talked about on the show, any of the headlines or the usual activity, then surf on over to theoptionsinsider.com. We'll have it all there for you. I also want to stress that Google Voice number again. It is 312-544-9356. Give us a call, leave us a voicemail, tell us your hopes, your fears, your dreams, what you think of Sebastian's puns. And if your comments or questions are good, we'll actually use them in a future episode, and we'll give you a little bit of credit so you can brag to all your friends. So with that, you can also, of course, post in our forum, theoptionsinsider.com/forum. Scroll on down, you'll find the option block forum. You can post your questions there. We're getting some good feedback there. I'd like to see some more comments and questions from our listeners. And with that, that's going to close it out. I want to thank all of our listeners for downloading and subscribing and streaming the show, and we'll see you again next time on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.